Hello and welcome to this weekend's silver chart analysis, looking at the daily, weekly, and monthly time frames. My name is Derek, and without further ado, let's get started. This line here, 23.6% Fibonacci from this high and this low, has definitely became a major level right now, as we've had a couple of weeks of this sideways consolidation. At the end of last week, it, for the first time in a long time, managed to get above the 18 average of highs. A total of 5 days it was able to get above it. Each day did not stay above the 18 average of highs, but it's of course in this sideways consolidation. 18 average of lows, barely starting to get higher, which means it's doing okay in making higher lows. The 18 average of highs is pretty much flat. Therefore, when you see this, you've had many tests of this level developing higher lows. That means on the break above, you want to look for probably a fast move up to the next level, played in at about 21 and a half. And at that point, you get one of those then what situations. Do you A, get further upside? B, do you come back to the level of support, which was or is now resistance? And if that's the case, we'll just talk about that later on. It is a bullish setup, of course, and whenever you see a nice bullish setup, if the bullish move does not happen, well, I consider that to be a failed move, and oftentimes failed moves creates fast moves in the opposite direction. So the more that this starts to look like a decent setup and nothing happens, I wouldn't be surprised for another significant leg lower, 1750 at minimum, but I obviously have no idea how this thing is going to be played out, because we live in a planet with multiple billions of people, and a few dozen, maybe a couple hundred people primarily control the market. Interesting situation. We got what we can consider an uptrend line, but there's several downtrend lines. You can make a symmetrical triangle this way. Maybe we get a little bit of a bounce and we continue the symmetrical triangle for an extended period of time, maybe make it up to this level and back down here. Of course, time can only tell within it. And that is the daily chart. On the weekly time frame, the last time the price action has even been at any point above the 18 average of lows for this particular chart was all the way back in February. That's almost now, or it is, a half of a year within this major downtrend. To say that it's oversold or overbought, yeah, it would be oversold. Whether it has completed its bottom, it's really almost difficult to say. There was a higher high for the first time last week, going back to like in here. Well, this week, another lower high and a higher low, which means it was an inside week, an inside period, which means lower high and higher low. Oftentimes you get this, it's an indecision, a move, or a precursor to that next significant move. Therefore, the next level of resistance will be this 18 average, and then you got significant Fibonacci lines here. And then, of course, you got this upper band and running average from this high. So many different levels. Let's move on to the monthly chart now. And within the monthly chart, we got Fibonacci calculated from this high to this low, which means for the move from point A to point B to be a failed move, it has to hold and stay above 61.8% for a significant period of time. That 61.8 level is 34. So, of course, we got a long ways to go. And right now, we are possibly going to be enduring 6 months down in a row. We've definitely gotten 5 because there's 1, 2, 3, 4, 5 consecutive red candles. Only down 13 cents right now, so whether it be the 6th consecutive down month in a row, I don't know. However, I've done some research on the silver action for 5-month streaks, both up and down. And going back to 1968, this is the results. This is the 5th time since 1968 that 5 consecutive months down has occurred. The first was month ending June 1970, when the price went down from $1.91 to $1.60. Then again in June 1981, going down from 20.5 to 8.30. May 2000, December 2000, and let me just change this year like that. And then, of course, right now, June 2013, 5 minimum. After all, it could go 6 or 7. This was the previous close for the month of June, so as long as it closes above that, it would end the streak. Closing below that, 6 consecutive months down in a row. There's been a lot more 5 straight up months, actually, so let's go to those stats. Starting in 1968, the price action going from $1.96 to $2.50, but some significant gains where it gained over 100% in 1974 and then over 300% in 1980, or 8 consecutive months. So it's had many times where it's gained 30, 40% over a short period of time. Of course, a 30% gain from where we are now would be enough to take us just only to this level in here. And regardless of where this bottoms, I would fully expect for this level to be tested relatively soon. Now, of course, when you know how this is priced in, how dollars are created, then it really makes it easy for you to determine how you, at least for myself, how to play this game within this really, really detrimental economic model. I look at the economy and how the monetary system is working. I believe it's in dire need of surgery. Who are the surgeons? We the people. Now, as far as new economic models are concerned, you know what? The best thing is to do is eliminate what's really, really bad, and a new one will just come into place. It's almost impossible to make one worse because of how detrimental this one is in a system of fiat currency that only central banks can mine, thus loaning it out at interest, which guarantees debt. And when debt is guaranteed, things do not end well. Things are not ending well for a lot of people because of the simple math regarding interest within this economic model. So thank you for tuning in and have yourself a great week. Bye-bye.